All right, U.S. markets are now open, and they have opened sharply lower as China has retaliated against President Trump's tariffs. A day after President Trump's tariffs over China, China piled additional tariffs on 34% of all U.S. goods entering the country. It's the first tariff response by any U.S. ally or adversary of the United States, raising risks of an all-out global trade war. Chinese State Council Tariff Commission said the U.S. actions were not in line with international trade rules, seriously undermining China's legitimate rights and interests, and is a typical unilateral bullying practice. Beijing also revealed plans to add 16 U.S. entities to an export control list and classify 11 others as unreliable entities.
The Ministry of Commerce announced today that the United States' imposition of so-called reciprocal tariffs seriously violated the rules of the WTO and seriously damaged the legitimate rights and interests of WTO members, seriously undermined the rules-based multilateral trading system and the International Economic and Trade Order. It is an unilateral bullying practice which endangers the stability of the global economic and trade order.
President Trump's Liberation Day tariffs have led to turmoil in global financial markets. About $2.5 trillion was wiped off Wall Street and share prices in other financial centers across the globe. The escalating trade war has knocked trillions of dollars off the value of the world's biggest companies and heightened fears of a recession. But the U.S. President Donald Trump insists the U.S. economy will emerge victorious. Wall Street led a global market bloodbath on Thursday. The S&P 500 dropped 4.8% in its biggest loss since 2020, while the tech-rich Nasdaq plummeted 6% and the Dow Jones lost 4%. Shockwaves also tore through markets in Asia and Europe. Apple fell over 9%, losing more than $250 billion in market value. Shares in apparel companies, which rely on cheap labor in factories abroad, also fell sharply, with Nike sinking more than 11% and Gap tanking more than 20%. Across the globe, shares in major sectors, including auto, luxury, and banking, all took big hits. The dollar slumped by as much as 2.6% versus the euro, its biggest intraday plunge in a decade, and suffered sharp losses also against the yen and British pound. But Donald Trump remains defiant, saying all this was expected, comparing the economy to a sick patient. The U.S. president claimed that it has gone through an operation. All right, to get to the heart of all of this, joining me now is Mr. Peter Morici, who is a renowned economist and professor of business at the University of Maryland's Smith School of Business. Thank you so much for joining us on WION. So, stock markets opened lower today as expected here in the United States. China has also become the first country to levy counter tariffs against the United States. So many are wondering, has a trade war already begun, or is that an overstatement?
No, we've been in a trade war for a long time. I mean, Donald Trump has been responding to aggressive actions by the Chinese. But it's hard to say that we were in a trade war with Mexico or Canada, with whom we had free trade and whom he has imposed tariffs and disrupted the automobile industry, or with the European Union, or even with India. I mean, you have very high tariffs, and that's been a problem for a long time. But it's hard to say we were in a trade war. China's a different issue, and I had expected him when he was elected to focus predominantly on China and to address folks like India, the European Union, whatever grievances he might have with Mexico and Canada through negotiations, and that his across-the-board tariffs would come much later if he got no place. So this is not what we were expecting. Also, I have to say that the methodology they used to compute their tariffs within hours drew the attention of economists and the criticism of economists across the country. As soon as I read them, I said, this makes no sense. It's hard to believe this has all been constructed by a couple of Harvard-trained economists. One wonders what they do in the economics department at Harvard, if they can turn out people. The tariff formula almost looks like it was constructed by a couple of English professors who went to a liberal arts college that didn't require any math or economics.
Well, President Trump says that all will be well soon. Where do you see things heading and ending up short term? Of course, I think we know what's going to happen, but ultimately long term.
Well, I think that we are at risk of a recession now in the United States. We had this fantastic jobs report today. So probably they're saying, look, things are great. Yeah, but that's in the rearview mirror. That's before all these tariffs. My feeling is we were looking at 2% growth this year. We're now likely looking at growth, closer to zero. Whether we dip into a recession or not is a chancy thing to call. I would say that a recession is a 40 to 50% probability. Growth less than 1%, much higher than that. So, either it's kind of like stagflation, because we're going to get a lot of inflation out of these tariffs. It's ludicrous to think you can put a 25% tariff on cars and that they're going to absorb it. Profit margins in the automobile industry in North America and Europe are only 6 or 7%. So they'd have to take big losses on their cars, and people don't make products to take big losses. So we're going to get higher prices.
All right. Well, thank you so much for all of that analysis. Of course, this is a story we'll be watching very closely. I know Americans are watching, people around the world are watching, and everyone and anyone that you talk to is talking about these tariffs. So I appreciate your insight. I look forward to speaking to you again very soon.
Okay, take care.